Bitcoin is fractionally lower this morning. Again, yes, it's holding the pivot line that I gave you guys, so that's great, but I still don't like the price action. Yesterday, the S&P reversed its previous day losses perfectly. Like, we were down 1% on Monday, 2%. We were on Tuesday, we were up 1%. So down 1%, up 1%. Yet Bitcoin in the last 3 days is net negative, right? So again, Monday, Tuesday, and then Wednesday. So that's not what you want to see. You should be kind of up here on Bitcoin if it was spades to spades or apples to apples, right? And so that's not happening. So what that's telling me when we're reading the logic, it's telling me that there's something a little bit weak here in the Bitcoin price, in the crypto price, and just to be a little bit aware. Now, listen, as long as the pivot line holds, it's okay. But if it breaks here, then that's where the bigger fall comes in my opinion, and target support number 1.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, let's discuss these topics and more.
And if we take a look at the spiders, the S&P 500 pre-market, you can see at 4 in the morning, we were down a little bit and we've rallied back up. And we closed yesterday. It looks like we closed right around here yesterday. No, check that, right here. So we are slightly lower on the morning session. Not much economic news today. The big data comes out tomorrow. That's CPI. And then on Friday morning, we have JP Morgan earnings. And remember, the key with JP Morgan is it's not so much about the earnings themselves with JP Morgan. It's more about what does Jamie Dimon say about the state of the economy. What is he seeing in terms of the banking at JP Morgan? Now, when you look at this chart going into Friday's earnings, a couple things that I see. So I see right off the bat, there's a beautiful parallel that's right in front of us. And so if this line breaks, that's where things get very, very messy for JP Morgan stock, right? You'd look at a big move to the downside potentially. Now, as long as this holds, then it could float back up. But the little bit of concern I have would be in this formation. This is what we would call a head and shoulder formation, right? So again, for those of you that know your basic technical analysis patterns, we would just want to monitor this pattern setup. Now, again, the same thing applies is that if this line breaks, it triggers. The head and shoulders would trigger, right? The key is about a head and shoulders. One of the things that's so useful about a head and shoulder pattern is that you can do a measured move to figure out the downside target. What you do is you essentially take the high of the head, you drop the plumb line down to the neckline. This is called the neckline. And you take that distance, and on the break point, wherever it breaks, so it might be over here, it might be over here, we don't know, but wherever it breaks, you add that to the downside, all right? And that ultimately gives you your downside target. And in this case, that would bring us down to approximately 178, 177, 180, somewhere in that vicinity. Now, if that does happen, that'll be very, very interesting to see where ultimately the stock market is at that point. But I just want to caveat it out with the fact that as of now, there is no break yet. You have to see the break. Otherwise, none of what I just did matters at all. Like if we just float back up here and we go back to the high end, sure, that's resistance, but then it even negates a head and shoulder pattern because you can't have a shoulder that's higher than the head. So this is some good TA technical analysis. You got to know these little nuances. I teach them obviously in the Winning Trader series. But again, these nuances make the difference between big time profitability and basically neutral traders or losing traders and investors. All right. So that again is something to watch here. Now, just going back to the S&P 500, I continue to kind of watch this zone here. So this is your previous high around 574.65, so 574.50. If we get above here, your march to 6,000 continues. And that's kind of been my thesis that really once we took out this doji high over here, then you favor a $6,000 S&P 500 print, right? And now in all fairness, that's not that much further up. That would be about 600 on this chart here on the spiders, and that would take us up about 4.5% higher. So it's not that big of a move. Now, another thing I wanted to show you guys is this, right? So this is the S&P itself, and I want to show you another way of calculating a target on the S&P 500. So what we do here is we look at this and we say, okay, what kind of moves have we had? And we're going to flip actually to the weekly chart because the weekly gives us a better view where I can zoom in. And so what you want to do in the weekly is you want to take your measured movement from your bull market move from the COVID low to the high of the bull market in 2021. All right. So we take this distance and we extrapolate that out. And what we see is it's about 2,600 points on the S&P 500. So the idea of a measured move is that there's something subconscious within us all that once this distance has been achieved over here, there's just this natural subconscious need to sell or take profits, or essentially it's exhaustion of a move. And so what you do with a measured move here is we take this distance, right, and we rotate it to the low of the bear market right here. So see, this was your 2022 bear market low. And what we do then is we add that distance onto the S&P 500 here. And when we do that, we can see that our target here for a measured move would be basically 6,100. So my point being is that you have multiple factors that are between 6,000 and 6,100 that are giving us a maximum upside on the S&P 500.
Bitcoin hovers around $62,000, with traders cautiously awaiting key U.S. economic data that could impact market momentum. Bitcoin has shown little movement up or down, retesting $62,000 several times as traders brace for the release of Federal Reserve meeting minutes on October 9. Inflation data, including CPI and PPI, along with unemployment figures, could bring volatility later this week. Analysts expect a very high impact at the end of October due to critical GDP estimates and the Fed's preferred inflation metric, PCE. The Coinbase premium, a measure of U.S. demand, has turned negative, indicating waning interest from U.S. investors in the current price action. With macroeconomic data and U.S. demand playing a crucial role, Bitcoin's next move depends on how these factors unfold in the coming days.
Oil is trading lower again. Again, great job if you're short with me in the commodity service, Smart Money Commodities and Miners. We are in the money nicely on that. But again, you guys know how I feel about oil. I said it yesterday. I still have a 2025 target of $50 or lower on oil. Doesn't mean it can't go up if something happens in the Middle East, but that again is a level to watch. Natural gas moving lower. We are in the money on our natural gas and continue to be deeper in the money on our natural gas short as well. So that's going really, really well. So congrats if anyone jumped on board with me and again is in the commodity service. We also have KOLD, which is a 2X play in my stock service as well, smart money stocks and ETFs. So crushing it there. If we go to gold today, let's take a quick look at gold here. Gold is pulling back. Remember, I've talked about my 2660 target. We hit that. We are now pulling back. I have a target range, and I'll show you guys. There's a bunch of lines of major support here. So this would be first support here on gold at 25.25, basically. Second support would be right here, 24.75. So this is your range here. I would expect price to come back in and kind of trade back into that range somewhere in here. It might stop at the high end, might stop at the low end, but I would still expect somewhere in that vicinity there. Okay, silver real quick, and then we'll do Bitcoin. But silver today continuing to pull back. I still have the target, which I've shown you guys for the last couple of weeks. Even when silver was up here, I said, guys, we should pull back to this zone here, and it's slowly getting there. Once it gets below 30, it gets close to that zone, but really these two trend lines meet. That's where the money spot is, right? That's where the highest probability of a bounce is going to come in. That's at around 29. But again, I wouldn't fault anyone from buying, for even me, maybe I'll start around 29.50, then buy a little bit more at 29.25, then buy a little bit more at 29, 28.75, and kind of dollar cost average in around that level.
A Bitcoin whale has accumulated an additional 750 BTC, even while facing $46 million in unrealized losses on their total holdings of 10,158 BTC. The whale accumulated 750 BTC after a 6-month break, pushing their total to 10,158 BTC despite unrealized losses of $46 million. Their average entry price of $67,026 per BTC means they bought at a higher price than the current market rate. Despite significant losses, the whale continues accumulating, demonstrating confidence in Bitcoin's long-term potential. Bitcoin fell as low as $61,800, but is now trading around $62,300, while most altcoins struggle to gain momentum. The whale's actions reflect continued confidence in Bitcoin, despite short-term price drops and market volatility. Billionaire investor Tim Draper predicts Bitcoin will soar to $250,000 once U.S. regulatory hurdles are removed, blaming the SEC for slowing crypto growth. Tim Draper believes Bitcoin would already be at $250,000 if not for the SEC's restrictive policies, which he says stifle the sector's growth. Draper's earlier prediction that Bitcoin would hit $250,000 by 2022 fell short, with the investor blaming outdated regulations. Draper urges the U.S. government to regulate cryptocurrencies like other assets, warning that innovation will move abroad without clear, supportive regulations. Draper suggests SEC Chair Gary Gensler's mismanagement of the crypto sector could cost him his job. Some analysts speculate that Bitcoin's price will be influenced by the outcome of the November election, with regulatory clarity potentially boosting the market. Draper's long-standing prediction underscores the belief that regulatory reform is key to Bitcoin's future growth. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.